Welcome back. Today I have a very interesting video that I want to talk to you guys about. I want to focus on rents, what they mean in a general concept for mortgage financing. I'm going to divide this in between three different topics here. We're going to talk about rents and mortgage financing, but we'll also be talking about rents and how they all kind of play out within the normal real estate world. When you buy a home, it has a suite, and when you're renting that property, but also about rents in general. So I know especially in our city, there's a big rental population. As much as the dream of home ownership is still something that's out in the air, a lot of people have decided either because they can't afford it to continue to be renters, or have decided just to be renters for the near future at the very least. So very interesting topics. I ask that if you like this video, you please give it a like or subscribe. We try to put out as many videos as we can with interesting topics, relevant to what's happening right now in our industry, in our city, and general information for people that live in our city. So let's start with the what's been going on with rents over the last year. So I have an interesting graph that I want to show you. Okay, well, let's take a look at rent prices and what's been happening over the last year. So if we go back a year, let's say January of 2018, we were sitting just under $2,000 for a one-bedroom apartment in Vancouver. And I would say that the one-bedroom apartment would be the most, I guess, the product which is most in demand out there for young professionals or people that either want to rent or buy a property. They kind of start off with a one bedroom. If they're a couple or single person, it's kind of the starting point. And what we've seen over the last year is, although property prices and real estate sales have come down. I mean, sales have come down substantially to what they were, a year or 2 years ago. But rents, on the other hand, they have increased. Now, you would think that because prices of homes are coming down and the sales have been coming down, that rent should follow. Now, the one thing we haven't seen, though, is that trend happening. And the reason that is if you're not buying a home, or if it's very difficult to buy a home, or psychologically you don't want to jump on board to buy a home, then you have to rent. And what you've seen is you're seeing a lot of demand for rental property, and that's why the prices have either stayed flat or have increased. So on that one bedroom, you could see that it slowly started to ship upwards to 2,100. It kind of balances out a little bit at 2,000, and then the trend kind of starts to head upward. Where we are right now is around 2,100 a month. Now you got to think that the way that these rates are calculated is based on an average. So they're taking the average of all the one bedrooms that are currently for rent. What are they renting for, and they come up with an average of a one bedroom rent or two bedroom rent. However, depending on the unit, they're starting at 2,000, but you could see anywhere between 2,000 to 2,400. I would say a one bedroom is currently renting for around the Vancouver area. Now, for a two bedroom, that stays steady over the last couple of years. So anywhere between 3,000 to 3,400 has kind of been the average for a two bedroom. But what surprises me the most is, it doesn't seem to be going down. And I don't foresee it going down as long as the demand is there. And we come back to supply and demand. And that's the same thing for properties. If there's no demand, they'll start to creep down in price. And same with rentals. If there's no demand, they'll start to come down. However, there is a lot of demand. So because of that demand, it's basically just kind of stayed. That one and two bedroom market has just kind of stayed up there and doesn't seem to be going anywhere. On the other hand, when we look at homes, you have that detached market. they've taken a bit more of a hit where they were going for around 5,000 or so. And again, it depends in which area this is. I know that on the east side, a home right now you could rent for about $34,000 to $5,000. Depending on the property. But on the west side, they're going for a little bit more. But they've stayed around that 5 to 6 range. And again, it depends on the type of property. But right now, in between $5,000 to $6,000, you can rent a home in Vancouver. A decent home that you want to make your family. But I mean, that's a lot of money. Think about it, $5,000 for a home. Not a lot of people are making that type of money, so that's why a lot of people are either doing roommates, if they're renting a home, they have to rent the basement, and the same thing happens with people buying. They want that mortgage help, but those are huge. So that's just to give you an idea what's happening with rents. I think that you will continue to see rents shoot higher and higher as the months go by. If people are not jumping back into the buying a home mindset, they're going to be renting, and we're just going to see a lot more demand for rental, and there is not a lot of supply for rental, so you're going to see a lot of competition on the rental side of things. Now, I can tell you that people that are currently renting a property, it's renting pretty fast. If you have 1 bedroom or 2 bedroom, you need to put it out for rent. For some reason, it is gone within the first week, and that has not changed over the last couple months. So as you can see, rents have substantially increased over the last couple of years. If you're a renter right now, you have seen your rents, slowly creep up. Now, if you've been in one place alone over the years, well, you've only been increasing by the amount of inflation, plus 2%, plus 1%, depending on what was going on that particular year. But there have been, minimal rate increases over the years, if you've been in the same place. However, if you have moved properties, so you have moved properties, you have seen a substantial rent increase. To where maybe you were paying, at one point $1,500, all of a sudden it was $1,800. Now that same property is probably worth $2,100 in the open market. So as renters right now, I feel your pain. I know that you've been paying a lot over the years. You're continuing to paying a lot, but it has to do with the amount of supply currently available for rent. And unfortunately, in our city, and I'm not just talking Vancouver, but I'm echoing, Burnaby, Port Moody, Coquitlam, even out in the suburbs, Langley and Maple Ridge, Chilliwack. The rents have increased, substantially because there's a lot of demand for rents. Because a lot of people have not jumped into buying a place either because they just couldn't do it. It hasn't been affordable for them, or they just never got to it. But it's it's really starting to hurt renters. They're really paying a lot of money for those rents, but that's just kind of the cost of living in this city, and I think we're all aware of that. I think that many of us understand that Vancouver is an expensive city. We all know that Metro Vancouver is an expensive place to live. However, many of us continue to live here because we know it's a very nice place to live, and it offers different things for our quality of life and for our family, and a lot of people will decide to stay. Even with the high cost, and it's the cost they're willing to take to be able to live in this city, and many of us decide that's we're okay with that. It's the cost of living here, and we've been taking it over the years. So unfortunately, as for renters, I unfortunately don't foresee rents coming down in the near future because there is not enough supply to bring those rents down. Okay, unless the city jumps in and does some kind of rent control, they might just stop at what they're at and be able to kind of bring that up just a little bit, ties it to the unit. Something like that may happen, but that could also backfire because if you do that and you do tie the rents to the unit instead of letting landlords increase as the tenants move out, I think that a lot of people that build rental units are going to stop building them because there won't be any financial sense for them to build them anymore. So, don't, it might sound great as a renter. Oh, yeah, let's, hopefully they can't increase the rent on this particular unit anymore. But in the long term, it could backfire because there'll be even less supply of rental units, causing a lot more problems. So it's kind of a give or take, right, for one or another. Now let's talk about rents when it comes to the mortgage side of things. So when we're going to finance a property, and if you're looking for an investment property, they're obviously looking at your debt service ratio, what you currently have, and also what you want to buy based on the current income that you have, as well as the type of revenue that this property is going to produce. So very important, obviously, the more revenue that it can produce, the better you're going to be off. If you're planning on living on that property and it has a mortgage helper or a suite downstairs that you can rent, that is definitely going to help you to offset the cost of the mortgage itself. So if a property is worth, your mortgage is worth $3,000, you're renting a suite downstairs for $1,000. All of a sudden you have $12,000 you're done in a year that can go towards that mortgage or the cost of the property. So that definitely helps on the mortgage side of things to improve your debt service ratio. Now, do keep in mind that depending on the lender that you're going to be using, not the full income can be used all the time. So some renters might say, some banks or lenders may say you can take 50% of the of that amount and put it towards your income towards qualification. Some might say 25. Some might have a different type of structure. So it's important that you're talking when you're talking to your mortgage broker, that they're aware of what those rules are and how they can help you to put the best product available to you when it comes to the financing side of things. In terms of rentals in general in the real estate industry, for people that were buying them as investments, a couple of years back, you could still cash flow on properties. You weren't cash flowing that much, but you could put down 25%, 30%, and you were maybe cash flowing, a couple $100 on your property. Nowadays, very difficult to cash flow on many of the properties that are out there right now because the prices have increased substantially. Most people that are investing in properties are hoping to do it with the idea that the property is going to increase in value, and that's where they're going to make their money back down the road. Now, over the last couple of years, as you remember, there was a lot of speculating happening. So there's a big difference between the speculator investor and the long-term real estate investor. The speculator investor, is hoping to buy something and sell it within, 6 months, 8 months, sometimes even a lot shorter than that, just kind of renovating and flipping and trying to make the money as the market's going up. While a long-term investor will keep a property for a minimum of 5 to 7 years, sometimes even longer. Sometimes they will never sell that property. They'll just keep it as an investment in their portfolio, and eventually that property is paid off by the current tenant, and it's a cash flowing property for them, part of their, imagine, as a dividend for them. So there's different type of investors when it comes to real estate, but unfortunately when they put out new rules and regulations, as they've done now with the speculation tax and vacancy tax and all this, it's kind of a free-for-all. It applies to everyone, right? So even if you were a good investor that was maybe just keeping it as a rental and so forth, unfortunately now these new rules are coming into play, and you have to decide, if this is your secondary property, you're going to keep it rented, or what you want to do with that. So the new rules apply to everyone, and every situation will be different. So it's important that you assess, from time to time, even when things change, if this is the best scenario for you. The ideal property is a property that cash flows. But again, in this market with prices so high, it is hard to find these type of properties, and fewer. You could maybe I find that with detached houses, it's a lot easier to cash flow because you may have 2 units, sometimes 3 units, and it makes it a lot easier for numbers to kind of work. So, if you are thinking of investment properties, it's all about making the numbers work. Condos, unless you have a very large down payment, they can still work. But it's all about checking the numbers and see how we can structure everything to make it work for you. Anyway, I hope you found this video useful. Rents, if you're an investor, I think you've kind of acknowledged that the rents will probably continue to stay up and continue to go higher as there's less supply of rental property. Also, even though there are units that are being built, these renters that sometimes I'll have renters tell me, oh, there's all these new units that are being built that are coming on the market, and I'll say yes. However, a lot of this property that's being built right now has been built as a luxury type of product, so they're going to be either very expensive when they sell or extremely high rents. Again, we come back to that affordability issue, and the type of property most people rent is your average medium entry unit, not a luxury property, that's worth 2 times, 3 times its value. Anyway, I hope you found this video useful. Please subscribe, like button, and